Hello and welcome to Building a Scanner for Stochastics in the Downtrend on TOS. And let's go and get started here. So here we are. You open up your account. You'll be able to, this is my live account. You're going to see this in action. This is our percentage wins that we had this past week. Not wins, current positions. So how we get started, we'll go over here and go to the works, go to scan. I know I might be preaching to the choir to some, but I'm making this video available to everyone. So even a beginner getting in here will have a chance to catch up to the rest of us seasoned traders. Okay, so we come to scan. Now, before we go into a scan, you have to understand that there's conditions to build a scan. And that's what makes the scanner essentially a filter. So the best way to start is to actually go to a chart of a stock that you're looking at and a stock that you have marked off, and you have your favorite stuff. Now, stochastic scan by itself is not used. It's stochastic scan in the down condition looking for puts has to be also supported by other indicators and price action. So here, if you're looking at this chart here, I'm going to take the cursor down to there, and you can see that we have a price action, which is your red candle and green candles, and we have our 10-day EMA moving average. That is what I use for determining the trend. And I don't go into the long trend like, it's been going down for 2-3 months. No, I'm short. I'm a swing trader. I'm looking to just get in, find my target, and get out. And then I'll conclude at the end when we run the scanner what I will do, initiate for a trade there. So the thing would be is that you have to find out how many conditions you have to have enough command lines in your scanner to start building. And here we're going to have their first condition, of course, is the lead off, which is stochastics. So we have stochastics, and the stochastics is going to be less than today. That's one condition. Write that down. Then the next condition that I like, before I even get to the lower panel, I look at the price action for correlation. And that is, I'm looking for a close below the 10 EMA. So there's a close below the 10 EMA right there. And I would really like to get that one or this one within the context of it. The next one is that the candle is red. So this candle here, even though it's a close below the 10 EMA, would not qualify for my put scanner, because the fact is that we had a green candle. Anything can happen the next day. Until we have crystal balls, we are doing is giving our best guess opportunity and probabilities of the action that we're taking. I mean, look here, we had a green doji and this would be a nice pop-up. And anybody who was looking for pop-ups, this would have been something that would be done and making some money on. So that said, our next condition is we want the close to be less than the open. Red candle. Close is less than the open. So that's the other one condition. We're looking at the other conditions. Now you'll notice I also have, I'm going to explain who these guys are so that questions will come after. This is price channel. I use price channel to see if it's flatlining, and that indicates strong possibilities of side action, which is good for butterfly trades. I am studying butterfly trades, and that's why. And I've always had the price channel because it's always been a good indicator showing me where support and resistance is, supply and demand is in the short term. So that said, we have the desperate price channel. This is my long-term, intermediate, and my short-term price channels. And you can see the, oh no, not down here, but we'll get into the stochastics in a minute. Okay, but that's not a condition for the scanner. That's what I'm coming across with that. I'm only looking at the close, red candle, and close below at the 10 EMA. The other thing I have here is the 7-day 2 standard deviation. I use that also as a guide for my eye to be able to say, okay, are we confirming into, we're going into a nice downtrend? And currently it's continuing the downtrend. Now, if we had been back here, this 7-day would have been picking it up from back here. So that's the so we're looking at two conditions already with three conditions. Close is less than the open, the close is below the 10 EMA, and the TMA and the 10 EMA is downtrending. So those are three conditions right there. So we're going to need three command lines right there. Okay, and so the 10 EMA is less than yesterday. So those are criteria that I add to the stochastic. So I don't take the stochastic blindly. Now down below in the RSI zone, it's a standard 14. I don't change anything here, but I'm also looking for that the RSI is downtrending. So we're looking for here in stochastics, we're going to be looking for the first thing in the stochastics is that is yesterday higher than today. And we're all going to look also to the stochastics. I also want stochastics in a green in what they call the sweet spot, and that is less than it's greater than 30. So when it gets down below 30, it's in danger of getting into turnaround zone. Now, granted, it can get down here in the down to 10, and price continues on crashing down. But I want to get up here. I want to get in this sweet spot right up in here. Where look here, this is an ideal sweet spot of entering. Not here, not here. Why? All this money is already gone. So the objective is to find this opportunity right there. Another thing to do visually also too, and I'm going to bring it to your attention. I like to get two closes below the DMA. It's not a hard fast rule. It's more of a visual rule. But if you look here, this closed below the 10 EMA, and yet the stochastics is rising. The scanner would not have picked it up. The scanner would have picked it up here on this day, right there. And I'll go to my vertical so that everybody can see the lineup. Right there. There is the ideal entry for this. And that entry would have been, let me go ahead and bring up the data box. Go to data box, go to style, come up to data box, come to floating. And now we have the floating data box. Now, the reason I don't use the data box is because you lose all the labels down below. But you can see the data box. And right there, the low was here, was 38.35. And then you have to decide what kind of buffer you're going to use. So let me go back to style, back to data box, and data box off. So we can keep the panels in play here. All right, so we're also looking for the stochastic to be greater than 30. So the reason I'm mentioning all this is because you're going to add all these filter lines to the scanner. Next is now we get into after we have our stochastics conditions, which is what I do. What I'll start off first with. Then I go to my candle conditions. So in my candle conditions is what I was talking about up here. And now I'll go down to see if the rest of there is correlation from the other indicators. And I'm using the most popular indicators. The RSI 14, no changes, and it's downtrending. So right there you can see very slight downtrending, okay. And then you also have the has histogram. I don't use much of the K line and D line because you can see how they are separating, and I like crossover on those actions in another strategy, but not necessarily here. But you could go ahead and say, you could add an additional filter, which is very simple, and add that the K line in the MACD is also declining. So we'll go ahead and put that one down. So we have the MACD histogram decline and downtrending, and we have the K line of yesterday, the K line of today, less than the K line of yesterday. Now, the reason I'm using those terms is because when we go to the building scanner, now that we have these scanners, and I'm counting here, I have 3, 7, I have about 8 filters that I'm going to be using. So now that we have an idea of how many filters we're using, and we'll come back now to we now go back to our scanner panel. And there's our scanner panel. Now, the first thing in the scanner panel, now I already wrote in the title, Stochastics puts downtrend close below the 10 EMA. When you are starting fresh, the first thing that's highly recommended is name your scanner. So rename your scanner first, and then when you go to save it, you type in the title you're going to pick. And I have here stochastic puts. And the reason I do that is to remind me that I'm doing option puts. And I'm not looking for a short-terming stock. So that's another thing too. It's keep me focused. I do a lot of little things to keep me focused. So save, and if it's already saved, it'll say, okay, fine, overwrite it. So now we said I have here 6, 7, 8. 1, 2, 3, 4, 5, 6, 7. So let's go ahead and add another filter. And now we have our 8 filters. So now at the top, you start off with the scanner type. Now you're going to see what area. You can pick all kinds of designations in Thinkorswim. So you have categories, but then you also down here, you have all these other ones to pick from. Like, you can run the scanner against the biggest gainers or the biggest losers and then see where they're going, because the stock in motion stays in motion until it changes. Newton's law still applies. All ETFs, if you're an all ETF trader. And then down here, I'm not even sure about commission-free ETFs. I've never heard of that before. But double long, double short. Well, double shorts we could put, so we're looking for, of course. Economic indicators. ETNs, electronic traded notes, are something not to get into that trading. But you can see you can have lots of choices here where you can run the scanner against. That's the important part. Once your scanner is built, your scanner is good to go all over the trading universe. So optionable, done. All symbols, category, all symbols, and nothing is being excluded. I'm going from $10 to 400. And if you pick up another scanner and you don't see the word volume and you see the word stock, just come to the down arrow, and then you'll be able to have your drop menu to pick what you want from down here. There you go. All right. So I'm also, now if you notice that $10 to 400 is about 4,500 shares, or 4,500 entities. I make it a million of 5 million or better, especially if it's a fresh stock. Well, if it's not one of, how is it? People have favorite stocks, and sometimes some of the favorite stocks don't have great volume and don't have great option opportunity, but it's my favorite stock. Okay, if you're married to your stock and you love it, do what you can with it. All right, let's go ahead and start building the scanner now. Now we'll start adding all the parameters. So I wrote down my parameters, and I'll start off with the first one. Now, when you add the add lines, you're going to get ADX as a default from Thinkorswim. No big deal. Editor, delete it, study, and the first thing we're going to add in studies is our stochastics, because that is the lead indicator. And yeah, can you put it in any kind of order? Yes, you can. I just happen to keep to it this way because then it keeps me more on track. Now, here became a big dilemma. Which stochastics is the best one to use? Speaking with Arthur Evans, who is a director for the OTA school, West Los Angeles. I'm pretty sure it's a West Los Angeles school. He said stochastics fast. So we'll use stochastics fast. Now, first criteria, we want this stochastic be going today's stochastic, and also you got to let me stretch out this panel. Today's stochastic is less than. Again, come to studies here and stochastics here. Stochastics fast yesterday. 1 day, offset is 1 day. Now it'd be kind of key. I've always confused, if this is into the future, I've always been curious about that. But that will be another laboratory experiment another time. All right, my ranges. I go 90-10. And the reason why is because I've seen lots of stochastics get past 70. And when it goes 70, you start going short, start looking for the exit. Excuse me, it goes past 70, it's going in the strain. And I've seen stochastics run as high as 98, and stocks, the price goes right to the moon before. And if I had sold out because of the hitting of the 70 rule or even the 80 rule, I would have left a lot of money on the table. So I look for my turnaround zones in the 1090, and you need to match both sides. It's extremely important that both sides are matched. Alrighty. Other conditions, the 10-3 on the K line, D line are long. The average type is exponential because why? We are dealing with options, and we want to, if it turns against us, we want to get out fast. We want a signal breakout for the K line because that's the line that we're following because it is stochastics fast, and within 1 bar, which is 1 day. Okay, so there is the beginning of the stochastics. Now I'm going to rush this a little bit fast in setting it up, but I have any questions, just pause it, read it over, and then be able to just match my screen to your screen, and you should be good to go. All right, so now once you have all your conditions, you go hit save, and that's done. And then you get the word OK here, and now you have your line. And now you have your stochastics less than. Our next stochastics condition that we want, and I try to do everything in groupings, so it makes it easier to review. So now I'm going to go stochastics again, study, and we are going to go stochastics fast. And now on this one here, we want today's stochastics. We'll go ahead and stretch this down. Also, make sure you change your parameters to make sure that everything comes up correctly, that everything matches. Now, what we want here is we want greater than, and we want value, greater value, and we want it above the 30 line. Now, why 30? Well, 30, anything above the 30 is that there's still running room for the stochastics to come down. And then depending on the scanner to find all the right conditions after all the parameters are put in. But in addition, it's going to be filtered by volume. So we're going to be looking for stuff that has great potential running room. When it gets under 30, it's in the danger of the turnaround zone. So yeah, you might get in, and you might get into a stochastics 25, and it continues on down, and you make some good money. But I have seen too many times where once it gets below 30, price will start flat bottoming, and then looking for a way to break out and go back up. So I like to get the stochastics above 30, which is the sweet spot, and that's it for that. So that's our value condition, and we get our OK, and now we have our value of 30. So that takes care of the stochastics conditions that we're looking for. The next thing that we're looking for is we want price to agree with the stochastics, and that will be the next several conditions. So the first one that we're going to be looking for is we want the close price. We want the close of today to be less than the 10 EMA. There. That's what we want. We want the close of today to be less than the 10 EMA. And we also got to change the 10 EMA down here. That's where you got to be. The default's to 9 at sink or swim. So anytime you're not, and that's it. Oh, and then we'll take that signal. We'll take that signal. So now we want the close to be below the 10 EMA. Less than right there. That's going to give us our red candle. That's going to give us the close below the 10 EMA line. And now we'll OK it. Now we want to confirm that we have the next one is the close. We want price. The close is less than the open. This gives us our red candle. So the previous one was the close below the 10 EMA. This one now is going for this assures that we are looking at a red candle. The close is less than the open of the candle, and that will be OK. Now we want the 10 EMA to confirm that we are in a downtrend. So now we'll go here and we're going to go condition again and then study there, and it's the X right there's a shorthand, and we want the 10, of course, and we want the 10, what the exponential, today's exponential 10 is less than study of the moving EMA. Forgot my shorthand. Okay, there we go. And 10, of course, from yesterday, one day before, the day before, yesterday. So this 10 EMA is today, and this TMA is yesterday, and it's less than. So we now assure that we have a downtrend for the moving average. And we'll save that and then add that. So now we have our stochastic condition, and we now have our candle conditions, and we have a trend. We have a potential trend set up. So that takes care of that. Now we're going to go to RSI, and we're going to add condition and study and RSI there. And the RSI standard 14, don't change it there, but you want the less than, and you also want, I also like the signals and closing price, and you want the RSI is less than the RSI again of yesterday, one day back. And so there we are. And now we have the RSI is less than yesterday's RSI, which indicates a downtrend. And OK. So now our last and final, then our last condition here is your MACD. Yes, MACD. To be the two MACDs. Two MACDs will be added here. Delete, add condition, come, study, MACD histogram, right there. Today, I leave all the conditions down below the same. I have exponential already. I will go with the yes signal. And the histogram is less than study, MACD, histogram of the day before. So the conditions are the same. Match the yes and save. Okay, so now our histogram is downtrending. And now our last and final is the K line in the MACD. Addition, come here, study, MACD. And now we're looking for the MACD and MACD, oh, MACD, there it is, MACD, and exponential. I'm not going to take a signal on that one. The MACD, and we're looking now for here is the value line, and that would be the down signal. So we want the MACD down signal to be less than MACD and MACD of yesterday and of the down signal, and yes, and yes, and there's our scanner. Now, it's a lot of work. Now, let's say that, for example, that we messed up on a command here. We looked at our notes and said, oh, we got it backwards. You know, we did the more than less than. Or we run the scanner and something doesn't come up right. Well, the best thing to do is first save it. Save the scanner with everything inside. Why? You can easily remove pieces without having to rebuild. So I can actually go through here and click off stuff that I feel that maybe I messed up on. And this comes from a lot of trial and error and scan building over the years. I'm not crazy about this last command. That's why I made it the last command. And I'm going to run it and then see what happens. So now we're going to run the scanner and see if we have any results. Now, one thing to get real estate is you can come over here and collapse and get your real estate and then run the scanner. And then hopefully Thinkorswim doesn't hang us up and it found nothing. All right, so we know the world is not going to have nothing. Something's going to be out there. Like I said earlier, I wasn't too crazy about this one. And remember, if I don't save it, I still get to get it back. I can take it away temporarily, just take it away, and now run it. And now we have it. So that last command apparently was not working well with us. So let me do something here. Okay, here we go. So taking away that last command, now we have our conditions. But before we go and save the scanner, taking away that last command, we're going to do is see, is the scanner give us, are these really correct? Also, too, when you run your scanner, it'll sometimes, many times, it'll come and give you something else like, oh, percentage. I think it's called percentage. So here you can you go to basic price of quotes and come down here to volume, and then you get your volume. And I'm going descending. So now we have that, and we have 21 choices. So the top of the line was Carnival, possibility that the world is having a problem out there again. I don't really follow the news. I listen to news, I watch the news, but I trade off the news, I do not. Come down here, and now I sent it here, and now we're going to review. So the thing you're going to do here is important, is to see if all the parameters for the scanner were met. That's the important part here. Okay, close below the 10 EMA. First of all, the STO is going down, and it's greater than 49. Condition 1 and condition 2 have been met. Conditions 2, 3, and 4. Condition 2, was it closed? Did the close was less than the open? Yes. Was the close below the 10 EMA? Yes. Is the 10 EMA downslooping? Yes. So those 3 conditions now have been met. All right. Now we'll come down to our RSI. Now, on the RSI, it is downtrending, ever so slightly, but it's downtrending. Now notice something else, that you could also too, if the RSI gets way too low here and it's in danger of the turnaround zone, also watch out for the trade of the RSI 2. The bottom line is that you could go ahead and add another command and say, I want RSIs only that are greater than 20. So you want to make sure you have some running room. All right, so, but RSI is downtrending. That's one of our conditions on our schedule. That now takes us to the MACD situation. And in MACD, we're looking at here, histogram is declining. And now the K line is the one that we removed. Possibility I didn't write it correctly, but it looks like it is downtrending. If we go to the data box, if we go to that, put the data box on screen, then we'll be able to see it. Where are you, data box? Okay. Oh, there it is. Okay. All right. So right here is the MACD. So we can bring this down. There is the RSI, MACD. MACD box is where? Oh, it keeps jumping up every time I come off it. Oh, not good. Not good. Let's see if I can stretch it long enough to be able to keep it on screen. No, there we go. So there it is. Okay, the MACD. What happened was the blue line flat line. That's why the scanner did not pick it up. It was flatlining, but it should have picked up on something else. But either way, the command didn't work. Don't worry about it. Just get rid of it. All right. So that's our condition. And then how? Now we go into. Now that we have our scanner and the scanner worked out. Before we get too carried away, and but all the right product, we then spot check it one more time. Quality control. So we pick something else. Arbitrarily just pick anybody. Come down. Go to that chart and then review that chart to see if it also meets the same condition. And now you notice I'm also new mount is it's on my list of watch list. It goes 4168. All right, condition 1. Stochastics declining. Yes. Is it above 30? Yes. Okay. That's condition 1 and 2. 2, 3, and 4. Did the price close below the open? Yes. Is the price close below the EMA? Yes. Is the EMA declining? Yes. Come down to the histogram. Come to our RSI. Is RSI decreasing? Yes. And is the histogram changing direction? Yes. Red to green. Green to red. Green to red. And now look, here the K line should have been picked up. So maybe I wrote something wrong in the K line MACD, but it's not important because why? We have so many filters. You can get to the point that you have so many filters, you got nothing to trade. So there is it. So that's, and then we also look at the 7-day 2 standard deviations also indicating that this is a continuing downtrend. So we have some nice confirmations here. One more time. Now, why do I do this? It's because this is to assure. Now, I don't want to pick something. Newmount is a mining company, so is Schlumberger. So I want to pick something that's completely different than anybody else. Transportation. Let's go see what's happening with JetBlue. And go back. And there we are. So now we'll zoom in. There we go. Now, JetBlue does not owe me any money. That's why JetBlue is not on my watch list. But did it meet the criteria that we're looking for in the scanner? Condition 1: was the stochastics the downplane? Now you can say that's sort of flat, but if you zoom in close and you look at the values, we'll go ahead and bring the data box over back again. And if you look at the value of stochastics and the stochastics panels right there, and you go to the last candle, it's 53.36, and the next day is 50. So right there, even though your eye cannot see the difference, the scanner did see the difference. So conditions 1 and 2 are met. Number 2, 3, and 4 was the close below the 10 EMA. Yes. Was the close below the open? Yes. And is the 10 EMA also declining? Yes. Now that takes us to histogram. Takes us to the RSI. The RSI is also, again, it's ever so slightly, but again, the scanner doesn't work for you. 45.16, 45.04. So that is a decline. Even though your eye cannot see it, the data box and the scanner picked it up. Is the histogram declining? Yes, it is. And then the K line in the MACD is also squeezing on top of the D line. Again, this last panel is the ATR. It's just there for purposes of using. I use the ATR as once I set up a trade, I use it. I do an ATR calculation saying, okay, approximately how many days should I be in this trade? Now, ATR is not perfect. An OTA instructor said ATR, the way he uses ATR, just get a ruler or a yardstick, and that is ATR times 2. So that's his anticipation. If it says that if price is going to be there within 5 days, it's more likely going to be more like 10 days. And that was his take on the RSI. So you can see here that we have met the conditions. We also met a better, another confirmation is that the close, the last 2 closes, the last 3 closes have been below the 10 EMA. Now, for candlestick readers, this would be concerning. I mean, we have a mini hammer in the middle of a current price cycle. So this would be a little concerning about it. All right, so that concludes the scanner portion of it. Now, how do I set up the trade? And that's going to be pretty much really easy. I use my Fibonacci retracement. I have adjusted it to my Fibonacci retracement so it comes and shows my 3 to 1. My entry would be the low of the candle, and the exit would be based off that doji. Here's where it becomes, you can use it off the price channel. That's why I have price channel here. You can use it off the price of deviation. That's what a deviation is here. The deviation and the price channels are to help me. Where is the possibility that price might turn around and then take me out of the trade? There are, again, back, no, not back. Again, you haven't heard it before. I am a big follower of Jack Swagger's market wizards, and a lot of the market wizards are very tight in their risk management and their stop loss. Some will go from the body of the candle to whatever width's above it. This one here is, this trader would actually enter, would put it here at the bottom of this candle and the top of this candle with a little bit of buffer. That would be his entry. Another trader would be the standard deviation right there. No one could look right here. Look, we have a mini swing high. So we have a mini swing high right there. The high here is 1424, depending upon what you're going to do for a buffer. But I would, so for demonstration purposes, we can say that this is going to be 1425, round off the nickels and zeros. And the low here was 1341, 1340, there it is. And now that would be your 3 to 1. Question, of course, is, has price been down this low? And that becomes, you're going to have to go back in history and say, okay, has it been, of course it's been down to 1095, but how long ago? And where is the real resistance? Because we have a strong resistance here. Remember, I'm using price channel as a support and resistance. So again, if I was to be looking at this trade, possibilities would be maybe not, because of the fact is that I'm going to turn off the problem is that this would be a major resistance. Look how long that price channel has been down here in the intermediate zone. And is the long zone here? I don't see it. I don't see the long one. So, but that would be the idea of setting up the trade. Is you have to determine what is your risk management. And that is the key. The key is risk management. And then also your exit rules. That if it crosses the first ratio, you can put your stop at the third ratio. At the first ratio, price closes below the 1170. Then you can put your stop at 1170. And when price goes to 1085, take profit, get off the table. Just grab it and go. So your returns should be pretty good. On the average, my 3 to 1s have been very good in return. So that is the conclusion of how to build a scanner for the for stochastics downturn with my various parameters. So I would highly recommend that if you're interested in building that scanner, is to now that we have done quality control and we actually jumped the gun and went to the trade. Now we're going to do it's save, and now we save it, and we're going to save it without that last command one I took off. So we got these. Now we go back to, now you go to the top and start saying, okay, now we'll work our way down and start looking for trades from, depending on what your parameters are. You know, you might say, you know what, I can't deal with stocks over $100 because options usually are higher. I'm not. I usually don't want to go with. I don't want to go below. So you can always change this up here at the top. You can always say, you know what, I want more. I want more opportunity. And depending upon your budget. So there's a lot of now we're going to the parameters of what can be tweaked and work best for you. So in conclusion, I hope that has helped. And remember to, I would recommend building a scanner, play the video back, and just stop it in play, and then match your scanner screen to set up. And with that, I conclude with this special video on building a put scanner for Thinkorswim. And with that, I thank you very much. Bye-bye.